Hello, active traders. I'm Ken Calhoun, the original Day Trading University and Trade Master. I wanted to welcome you all to our episode of this week's hottest stocks. For those of you who are returning from last week, hundreds of you registered. Do you like these? Are they pretty good? I try to not put too much sales into it. I like to give you good content value, wrap an offer in the content as Frank would recommend, and make it work the right way. Anyway, as always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. Hey, look, I did 4,700 frickin' trades in 5 months. Hey, I'm a real trader. Imagine that. Compare against all my competitors who don't have any proof that they're even real traders. They use overseas phony brokerage accounts and all that crap. I'm the real deal. Like a champ. Anyway, all information is for educational use only. Not making advice about to buy, sell, or hold. Blah, blah, blah. I've been everywhere since the dawn of time. You may have seen me in Stocks and Commodities every month, which I highly recommend. It's a great magazine. I'm in every month's issue with our Trading on Momentum column. I used to do live seminars, complete with showgirls and everything. I had traders from around the world come in to see those. And congratulations if you're one of those lucky, quite a few hundred people who come to see me in my private events, because I'm not doing those anymore. And most of us don't like to travel much, so myself included, unless it's to Vegas, which is why I do these in Vegas. Anyway, get on with it, Calhoun. What's going on? What's hot? The best chart of the day and my biggest winning trade today was thanks to one of my traders, Barry, who mentioned this guy pre-market, TLND. I made a long call for my members at 44.30 back at that time, then a secondary long call at 46.15. We're out at the whole number 48. It sold all the way back down to support and pivoted. And that's often a really good play, which is why I played it today. Buying a pivot. Even if you miss the first big run, try and avoid the temptation to buy it on the way down unless it really capitulates down to prior support, and often it'll bounce off that. So that's a good chart. I'm going to buy this guy again if it gets over 45. What did I say? 45.30. Hey, that's my alarm. A little bit late there, aren't you, alarm? Anyway, I'm a real trader. For complete transparency, here is 100% of all my orders today. Wins, stops, and draws. I am an active freaking trader. This is just today, right? You can see the timestamp here. It's my Fidelity account. This is early in the morning. I put in orders for TVIX, TQs, TME, MTFB, which I'm still in and underwater a little bit. UWT, DWT, CRON, TLND. Look, I bought it at 46.70 and I sold it at 47.80 for 1 point win. Unfortunately, I only traded 50 shares, but hey, it made a point out of it. So I'm a real trader with proof from today winning trades, right? And stops too. I took a stop trying to buy the bounce in this guy, a small stop. One of the hallmarks of a good professional trader is play, like my colleague Tom Salzman says, trade small, trade often. And that's exactly right. That's what I do. That's what a grinder does. As an active trader, you owe it to yourself to learn how to trade small, safe, maybe not, safe's not the right word, but small, more conservative, potentially safer share size. If we start off with a look at the market, which you always should do, the S&P is up. We've got a week-long bias market day today. We've got some modest strength in the NYSE trend. The New York Stock Exchange Arms Index is slightly long bias. We got moderately bearish sentiment in the NASDAQ trend, which is this ticker. I don't have time to go into what the trend is. But for great coverage of the trend, read my colleague Tony Turner's outstanding book, Beginner's Guide to Day Trading Online. That was my first Amazon review I ever wrote in my life back in the year 2000. This is something new. I have a close-up 4 1-minute candle, kind of a momentum indicator, pressure indicator that I developed myself for what the S&P is doing. And this is just the spiders, the most recent 4 minutes kind of zoomed in. So you can see, are we mostly green or red? What the heck's going on in the market lately? I also have a bias indicator that I update for my traders as well. But what's hot today? Well, let me ask you, first of all, how many of you are day traders? How many of you are swing traders? How many of you are both? And if you're like all swing traders, then I need to cover more swing trading examples. I'm currently going over day trading examples because I day trade. Every single day I day trade. You know, so many hundreds of folks learn from me. I've had quite a few thousand with me. I'm currently long Teva, by the way. I think I'm still long. I got to check. By the way, that's a quick writer downer or a note is I don't particularly care if I'm still in a position because I'm not obsessing over it because I'm only in 100 shares. I got filled at 1778. My trailing stop is at 75. So worst case, I lose 3 cents, which is $3 on 100 shares, right? But it's in the money, so that's cool. These guys all go to cash at end of day. If it keeps running up as we speak, even more fun. I'm long AZ. I was long AZN. I don't know if I'm still long. That might have taken me out. But I had a winning trade on the breakout in this guy as well. Always look for small gaps that continue, right? Those are the favorite charts. This guy ran from 40 1/4 up to 41, whole number resistance. And what you notice about this chart, and these are ideal for those of your swing traders too, you're looking to buy new breakouts that are a gap continuation above the current high. This is kind of like refreshingly world-class, candid that you don't see from anyone else. All the other educators, or most of them, are just they just talk about charts. And while that's interesting, it doesn't, it doesn't demonstrate authenticity of being a real trader. So I urge the world to learn from people who really prove they trade. I think it counts. I made a modest profit in the AZN. Here I got in at 40.65, so I bought it right there. And my trailing stop, I tightened up the trailing stop to just a dime, and I'm out at 40.9. Okay, so that's 25 bucks, so it's something. But again, if you're doing, 20, 30 trades, 40 trades, and you're making 50, 60 bucks each, you make quite a bit doing a grind approach as well. And if you do have nice home runs or nice hit and run breakouts, like this Teva trade I'm in, it can do well for you. So as you're looking for the types of setups, it makes sense to look at which charts are easiest to trade, where the volatility is the best. That didn't hit. I wonder if my DWT is about to hit. 8:45. We'll see. It's got about an hour to blank or get off the pot here. Let's see where they run. Okay, a lot of you are swing traders. Let's take a look at some swing trading charts then. I'm told DGAS and UGAS are no more, or they're about to. One of my traders told me, I haven't independently confirmed that, but just like VXX is gone forever, but VXXB is its replacement. So if these guys ever come back to life, I'm looking to play them on the upside. Now, if you play small caps, like look at this GSUM chart. I can zoom in here so it's easier for you to see. You can see the whole real bodies are large. You got a shooting star there. It was denied or overcame in today's breakout. And what I like about this, one of the patterns as a swing trader I'd always been on the lookout for are large green candles that bisect the major 50 or 100 or 200 simple moving average lines, because often that will lead, especially if the volume is high like it was here on the 12th a couple of days ago, that'll often lead to a nice breakout to the upside. And if you're looking at high volatility charts, we always look for gap continuations that have the huge profit potential. I'm doing a lot more in covering small caps because they're finally well worth trading. They used to be really horrible and usually not worth your effort pre-October of last year. During the run-up, we had much better trade opportunities and trade setups in the mid caps and large caps. But small caps have started to emerge as finally a good viable trading instrument because of the increased volatility in the markets. So the point is, learn the patterns. See this large green candle that bisected the 50 SMA? That's a good breakout signal. So if you're a swing trader, 20, 30 cents above the high of that day makes sense for breakout. It also broke the 100 SMA. Has what I call an acceleration ramp, where you got a steady uptrend but then all of a sudden gapped up with a doji gap day and a breakout to new highs. Now, if you'd like to learn more about these kind of strategies and more, do be sure to join my live room. I've had quite a few thousand people who've been members since I first started this back in the year 2000. Since the dawn of time, I am Day Trading University and Trade Mastery. And we meet 5 days a week. I do live real money trades like I am showing you today. Also, unlike other places, I do capture the videos from 9:30 to 10 o'clock or so, the most important part of the day. So if you miss a day, you can download it. And that alone is worth the price of admission. And it's only $6.95 for 6 months. That's a bargain. I used to charge and get $4.95 a month for a 3-day-a-week room. Now I'm only charging $6.95 for 6 months of a 5-day-a-week room with live real trades. So anyway, you have my word. It's very professional. We like to look at morning gaps and breakouts, momentum breakouts, day and swing trades, candlesticks. I do a lot on tape reading too. I'm the original trainer in tape reading. Since then, a lot of people have copycatted me, but one of the things you always want to pay attention to is real-time order flow in the tape and look for sizes imbalance and the speed of breakouts. And I teach how to do that in the live room. I'm an expert in tape reading. You may have seen my article in Active Trader magazine, which is sadly no longer with us, over a decade ago, or my video that I did with Money Show over a decade ago on tape reading. Since then, a lot of copycat competitors have started to say, I'm a tape reader. Morons. Anyway, look at this chart. One of the things that I want to draw your attention to is the range of the chart, the point range. That's at least as important as the pattern itself. See, if this chart was on a range of, say, 18 to 20 or something, it wouldn't be worth trading. The risk reward isn't there. But the range is 17 on a 90-day up to 30, right? So almost a double, well, 80% increase, right? So it's got lots of profit potential. So as a swing trader, and in my swing scans, hey, Weight Watchers certainly going on a diet, bada bing. I like to have fun with this crap. Anyway, this guy dropped from 56 to 30. It's starting to bounce. Now, what do you think would be a good confirmation that it's not just a dead cat bounce, or catching a falling knife? What would be a confirmation that this guy actually might be worth buying for a swing trading pivot? There's one indicator. And hint, it's not a squiggly line. And Chris is getting at it. Yeah, it's volume. You want to get volume. So I'd want to see volume on a pivot, say over, what are we at on the inside? 30.4. I'd want to see us over, say, 31 or so with a high volume of at least 3 million shares or so to show that we're not just getting some speculative, home traders are trying to buy it. Because look what happens. When volume isn't strong, it's unsupported by the force of breakout pattern. You get a slight bounce here. Price is up, but volume is not. And ultimately, that's a losing battle. What you want is price up and volume up. It doesn't have to be that perfect 45 degree, but if you have price going up but volume's going flat, that does not confirm an entry for a reversal, for a pivot. So having taken literally thousands of stop losses trying to catch pivots the wrong way and learning from my mistakes, use volume confirmation before getting in. That's the one I'm in or that's when I was trading today, AZN. Let's see if there's any good swing charts out here for you. Sometimes you'll find, for example, in this one, FET, that you get a breakout, a sideways congestion, a stair-stepping breakout again to the nearest moving average, and a pullback or congestion. What I like about this chart is the whole number resistance at 7. We always like to use whole numbers as exit targets. So is it worth trading? Yeah, maybe over 730. Again, not a trade recommendation, but that's why I'll look to trade it if it gets north of 7.3. Because that's above the moving average and it's above the whole number. So when you see these progressions, do pay careful attention to what the height is of this. It's a pattern day trader, pattern swing trader. You got to know your numbers, right? So our range here is, say, 350 to 550. So it's a 2-point range. The range here is 5 to 7. It's a 2-point range. I see a pattern. It's a 2-point range. So you got to make the math work out. So if the next trade makes sense, would be say 730 up to 9, or maybe 930, right under the moving average. So what share size do you need to trade to make it worth your while? What initial stop loss value do you need to trade to make it worth your while? How do you make money with these kind of charts? Again, I prefer breakouts to pivot charts. Just kind of like randomly going through the whole list here. Cron looks good. Our pot stocks have been up and down lately. They've been relatively imprecise. Snap looks good, but because it's a 9 for swing trades, I'm not going to buy it till it gets north of 1050. I remember back when it was 5.5 and 6, and now it's up to 9, so it gapped and continued. Another hot chart is this EOLS. Even though we have a bearish upper shadow here, that keeps us out until it breaks north of that, so over 31. We had a window or a gap continuation. And you can see here that pattern. Large whole body candle that broke right over a major moving average. Another pattern to look for is what I call baby bear, mama bear, papa bear. It's not in the classic candle patterns, but if you see a sequence of increasing volume, 1, 2, 3 increasing volume, and you see increasing whole row body heights of the candles, particularly if it pierces a major moving average, often that spells good breakout or gap potential for that chart. And sure enough, you can see. So everybody see the swing trading gap around 19 to 21 gap, then it ran to 30, 20 to 30 in the matter of a week or so. Spectacular. So for swing trading, you want charts with ranges and volumes and volatility that actually make sense that you can potentially make money with. Now identifying those charts like this UWT is one thing that my traders come to rely upon me for in the live room. And one thing that I also do is I will post entry triggers that I'm actually using in live real trades in the right column here. So I got prices identified ahead of time, not after the fact like everyone else. Ahead of the time, before 9:30, I put in my orders for a lot of the initial order flow at least, and then I put in the specific entry triggers here. So we got specific prices identified for everybody to practice with before the opening bell. And then we update those, of course, continuously through the market. So I hope that whets your appetite. We're going to get back to our day trades now. But I do urge you to consider joining me at Trading the Open. Or if you're a swing trader, swingscans.com. You know, SwingScans is popular with the world's swing traders. Trading the Open is mainly 80%, 90% for intraday trades. And 6 months access to me for just $6.95 is a total bargain, because that's over 30 hours of instruction of live real market trading that I'm doing in front of you for a bargain. This should be like 5 or 6 times that, but it's 6 months access from me for just $6.95. It's only $100 plus a month or so, so that's a good deal. And you can get there by tradingtheopen.com, subscribe, $6.95. Now, what else is worth trading here today? I'm going to check my order flow to see who's open and who just filled. You may occasionally see the Trader Workstation. I use the Active Trader Pro as well as the browser window here. I use both of them to manage my order flow. Here's my current open orders. Now you can tell I'm busy, right? Professional traders it's always very much a matter of, I may do thousands of shares a day, but only 100 to 300 shares at a time, so that my upfront risk is small. That is a completely different approach than the kids who are morons who blow up people's accounts that I inherit. So many people say, I lost thousands of dollars with, and insert name here of young trader under 40 who doesn't know what the blank they're doing, because they say, let's buy 5,000 shares of a $2 stock. That's called gambling and blowing up your account and foolishness. Instead, start small. So, I got lots of stop losses today, and I'm proud of my small stops. You should be proud of your small stops. If you F up and you get a small stop, good for you. Like this SAAX. This punk stopped me out at a penny. I was using a trailing stop of 12 cents. It did a parabolic arc. It ran up. It came back down again. So I'm in at 507, out at 505.99. So it cost me all of $1, right? Commission inclusive. So I took the shot. I bought like right here, and the stop took me out here, something like that, for a 1 cent stop. So big whoop, right? That's strategically valuable intel. And I've got your 6 in the live room. Copy that. I got lots of buddies in the law enforcement and the military. I live here in Colorado Springs. And by the way, if you ever live in a military town and you see our men and women in uniform, or they're Class Bs or Class As, or usually Class Bs are on town here, do consider picking up their lunch, or somebody's lunch in their party, or do something for our men and women in uniform. They are dramatically underpaid. And so I do support tax increases for teachers, cops, and soldiers, all critically important professions that are underpaid. Anyway, the point is, look at all these trades I did today. Some were wins, some were stops, some were break evens. Right? And I'm a real trader. These are real money trades. So I'm genuine. I'm authentic. I'm not just some guy who talks about charts like everyone else. And the reason I do all these trades is because I want to figure out patterns and strategies that make sense, right? That I can use to hopefully make more money in my own trading account as well. For example, here's a sneak peek at our current arbitrage strategy test, trading TVIX versus TQs, a 2-trade test. The strategy that I've outlined that I'm testing with live real trades all week is enter 2 trades each for TQs and TVIX on the open. Put in buy stop orders. I'll put them in at 30 and 80 cents above whatever the opening price is for each of those. That's 4 trades total with buy stop limit orders I've set up. I use a 40-cent initial stop and trailing stop. Just doing 50 shares each, so that's only a $20 risk per trade, or $80 risk for the entire trade setup of 4 different trades. My total risk to learn is only $80, right? And that's like nothing, right? So, and findings results like the day before Valentine. Yesterday was scratch. I think today was kind of scratch too. But we had 2 out of 2 TVIX wins on the 13th at least. And so I'm always testing out strategies for my traders. And that's one thing that I'm committed to doing, is very intelligently giving you the tools and technologies and the thought process and the intelligence and the authenticity of how, I'm a veteran, 20 years. I've been day trading since 99. Doesn't feel like it's been 20 freaking years, but it has. Hey, Teva continues on up. That's cool. It's all a numbers game. You take a lot of shots at the market and you take a lot of stops along the way. And your goal is to have your modest wins that you scale into or add to if you have time. I don't add this late in the day. I'll add something for an intraday swing if it hits early in the morning between, say, 9:30 and 10. I'll double down with a buy stop order if that triggers later in the day in the early afternoon, and then close it all out with the trailing stop into the close here. So let's see. Here's my Teva trade. Who else proves that they actually really trade with a real American brokerage account? Not these kids who are using some overseas phony brokerage accounts. By the way, that's a lot of theater out there. One of the con games that a lot of the dishonest young operators do is they use mirror accounts. They'll go long in one and short in the other in the same instrument with different accounts, and then they only show the people in their live room the one that won. There's a lot of crap out there, so be cautious. You should be able to read between the lines. Rule number 1 is if it looks too good to be true, it probably is. If anybody's out there claiming a day trade making like $3,000 or $5,000 a day on like 2 or 3 trades, they are completely full of shit, right? So you should know that, right? Unfortunately, they prey on the unsuspecting, usually college kids or unsophisticated traders who believe that crap, right? I'm here to tell you it is crap. It's not real trade. I'm a real trader. I'm the real deal. Anyway, so where did I get my Teva? So I bought it at 1778. We're 91 on the inside. Where's my trailing stop? 1781. So That's just 3 pennies up from where I'm in. But hey, I'm freaking bulletproof. I beat the trailing stop. So if it goes down, I get paid a little. If it goes up, I get paid more. Either way, I get paid, and that's why I trade. Give me an amen. If you agree with me, or say, give me an I, or rather, I'll channel Tony. Give me an I. We trade to get paid, or at least not to get screwed too badly when we're wrong. When I'm wrong, and I'm wrong daily with my trades, I have stop losses every single day. And that's fine. The key is they're like under $50 stop losses. They're not catastrophic $600 or $1,000 or $2,000 moron stops. They're really tight. Anyway, one thing that you want to learn from, let's see if we can find a good tape reading example for you guys. One thing you look for as price action starts to move is how quickly is price able to climb through each 10-cent window. So support, micro support on this instrument is the 90. Micro resistance is the whole number. If it dips down, which it is, now support is the 80, 1780, and resistance is the 90. And as it kind of hovers or chews through each 10-cent price window, there's specific patterns that you can learn from me exclusively at Trading Open and how to decipher price action using time and sales like a professional trader does. I also use the tape 100% when I'm looking at tightening in stops on exits. I'm looking at how fast does price go down under, say, the nearest nickel or dime. And what is price action telling us in terms of, for example, is there a pivot likely coming in this one? It's getting kind of late. If it were earlier, I'd put in a long at, say, 485. Remember I said that. But there's only half an hour left till the market closes, so I'm looking to wind down my current open positions. I go cash at the end of each day, so I'm not looking to buy right here. But for early in the day, something over 485. And so the way you get at that is you follow time and sales and see, what's going on in terms of the average share size. Do we have block trades that step in at 1,000, 2, 3, 4, 5,000 shares? There's all these little tiny poquito Manini trades under 500 shares, mostly under 500. What's the sizes imbalance telling us? Like this is telling us more sellers than buyers, right? Small numbers on the bid, large numbers on the ask. And you've got to know this stuff. You have to be sophisticated if you're going to trade the markets, because you're trading against guys like me. I'm a real trader. I'm not one of these bullshit chart talkers. I'm the real deal. I'm the guy you need to learn from. You don't need level 3. That's a bunch of crap. You don't need level 2 anymore. I used to teach level 2 trading back when it was relevant. But like my colleague, the late, great Don Bright said, ever since decimalization and software algorithms and all that kind of stuff, using a level 2 box to try and shadow the axe and all that kind of crap doesn't work anymore. It did work actually back in 99, 2000, 2001, but after we moved to a decimalized market, it stopped being valuable. It's kind of like a poker game, and people step off their bids and their ask all the time. So even if they're showing like 5,000 on the bid, the minute it starts to get there, they'll frequently step off that and it's a fake out. So you can't use level 2 anymore. What you got to use is the tape. If you're considering a new breakout and you're looking to see, you want to avoid a fake out, you're looking to see, is price action taking out new highs? Or is this canopy growth pivot going to hold? You want to see, does it get over, say, 47.70? Or does it go back down underground, under the 60? And how fast? That's another quick determinant, is how fast does price action go through each 10-cent window? If it's a slow grind, then it's not a momentum play and you want to stay clear. If it's a fast run, then you want to jump on it. And knowing the difference between the two is one of many skills that you'll learn once you equip yourself with the professional trader's approach at Trading Open. I'm a former corporate statistician for the Ford Motor Company. I'm a nationally certified quality engineer. I'm a UCLA graduate. I'm a former corporate training and development consultant for quality management and strategic planning for a lot of Fortune 500s. You can see my about me and see I've got the credentials and the real money trade experience to back it up to really teach you guys. So I hope this, it's a very generous price for somebody who's a 20-year veteran. And I've won multiple awards and all that kind of stuff. And I never get invited to trading championships, though. I wonder why. I'm the guy who never gets invited. They don't want to play with me because I'll kick their ass, right? It's true. In 20 years, I've never once been invited to participate in one of these little marketing gig trading championships. Those are just thinly disguised marketing things. That's why I never get invited. Real traders are not going to invite. They'll invite rookies who don't know how to trade. Guys like me, I'm a pro. I'm a mechanic. I know how to work the market. They're not going to invite me. That's okay. They can kiss my lily. You know what? Anyway, back to it. Any questions, gang? Let me know. Do you guys like these? It's not too much sales. I just say, hey, join my room if you want to join my room. But I like to give you real-time charts with actual real trades I'm in and give you the rationale behind them. Wins, losses, and stops. And I show you examples of wins and stops. So we got one more of these coming up next Friday. Should I continue on with these? I really don't have the energy to do the weekly week aheads every Saturday because I want to give more to my Swing Scans members, which I haven't. I'm able to stay around longer because I have more energy. The older you get, the less energy you have. But Friday, like now, is a perfect time because it's before the market close. Let me know if you want me to continue these. I may continue them into March. We got one more coming up the next week, week from today on the 22nd. But I hope this gets you interested in learning with me. I hope that I can demonstrate credibility and competency and authenticity and skill and do it with live real trades like I've been doing here for you and real charts that are the strongest charts in our current market. So, hey, thanks. Appreciate it. Thanks. Hey, thanks. Carrie, Joe, John, Dino, Chris, Carl, Lynette, Roger, Joe. Hey, Nan. HD, Chris, JV. Thanks. Hey, thanks, Lise. Hey, good to see you, Lisa. It's been a while. Yeah, I'll continue these on Fridays as long as I have the energy. Let's see a question from Trader. What spread do I have on Teva? Well, let's look at the tape. I don't see anything more than a penny spread. It's like a penny spread on this guy, right? The spread is you just look at the recent transaction flow and see how far apart they are. And they're just a penny apart, 88 by 89. So I just see a penny spread on Teva right now. Answer the trader question. Well, thanks, Joseph. I really like these. Good to see you as well. Thanks. Continue these on Friday. I want to see more. I really like these. Yes, great. Entertaining. Okay. I like to be entertaining. Cha-ching. Thanks, Chris. Woohoo. All stocks. All trade stocks are their options also. These are for stocks, but you can use a minimum volume. I use 15,000 shares, Chris. 15,000 per minute. Because anything less than that, and you do start to see bad spreads. You know, if you trade the instruments that have only like 5 or 8,000 or 3,000 shares a minute, you'll see huge, enormous, horrible spreads. So you don't want to trade, at least I don't want to trade anything with more than a few penny spread. Your spread should be a penny or two at the most for anything under $30 or $40 you're trading. The spreads go up a bit if you're trading higher priced instruments. For example, Tilray, one of the pot stocks that one of my traders, Barry, also told us about is good. This guy does have a bigger spread. See, like 51 by 57's got up to 6-point spread, 7-point spread. So for this instrument, the spread is much higher. So I don't like trading instruments as a rule of thumb unless it's really small share size that has more than a couple penny spread. So Tilray looks like a bounce though, by the way. Not a trade recommendation, but it may be worth a shot over 76.7. And that's as long as a professional trader takes to make up your mind. I've been doing this 20 years. I've done tens of thousands, millions of dollars worth of real money trades. You shouldn't be obsessing over, well, what's the MACD and the stochastics say? And, ooh, maybe the Elliott wave is saying it's in a 3. No, Sparky, that's not how you day trade. Kind of like, is it running? Is the volume there? Is the volatility there? Does it have a pattern that's defined that I know is likely to work out and produce a win for me? And then you take your shot. That's why I bought Teva today, late. Where did I buy it today? Sorry about that. Just a sec. Hello, this is Ken. Pretty good. How you doing? Sorry about that. I had to take that construction project. I like caller ID. Anyway, back to it. Hey, anybody got any questions for me? Let me know. Market closes soon, so I got to wind out all these positions. How do I wind them out? Well, I usually will tighten up the trailing stop to within a nickel. I'm going to cancel any pending orders. So if I have any buy orders, I cancel those. So for example, you see it's getting close to the end of the day here. So I've got some buy orders in for UWT, DWT that haven't yet hit. So I don't want to trade something just 15 cents before or 15 minutes before that. I'm always thinking money. So I cancel those orders. Let's see, my order to buy has been canceled. Because I don't want to initiate new, unless there's something that's really hot and really running, which is rare. I'm more in the wind down and close out your existing trades. And if you're swing trading, it's the same approach as well. So what you do toward the close is close out any open swings if they're not taking out new highs.